You are tuned into the Thursday edition of Agriculture Today. Welcome once more. Well, the story in agriculture, arguably, but you can make a good case for it, is the wild ride we see in the grain markets day by day. So much so that today, as well as tomorrow, we're going to devote time to the grain market trends and taking that proverbial deep dive into what's happening today into the feed grains. Joining us once more, Dan O'Brien, grain market economist, K-State Research and Extension. You marvel seemingly each day, Dan, at what's going on in these trades, but to put a capstone on it at the beginning, extraordinarily strong prices in corn and grain sorghum.
Yes, the broader picture has to do with almost apparently insatiable demand out of China for purchase for grain, and not just for what we might anticipate they'd use it for. Well, what we'd sell to them in terms of corn and grain sorghum for feed use, but they're going overseas and they're buying. We're hearing reports now that they're buying wheat from their own domestic supplies, as I understand it, but also from other countries such as Ukraine, Russia, et cetera, to the degree that some of those countries have put limits. I was going to say embargoes. I don't think it's quite that, but they put limits on how much of their own domestic stocks can be drawn down by this strong demand from China. So as China goes in there and is involved, you see it. Well, you really see it on the grain sorghum side. Literally the 98% of the shipments of grain sorghum that have come out of the United States have gone to China. It's just a small sliver, a little bit with a country called Eurasia, and a little bit to Japan, Mexico a little bit, just very little, but everything else going strongly to other parts of the country, basically China. And then you have on the corn side, of course, we've had strong pace, strong demand. The USDA had actually raised that export projection in the last USDA WASDE report. There's been some talk that we may not reach that aggressive run up. I think it's at 2.65 billion bushels now as their projection. So anyway, you got that strong demand, and it's happening. It has happened at the same time that the second crop out of Brazil, they call the safrinha crop, is come under great stress. And so when we saw the markets going great guns, bananas, whatever descriptive term we want to use, in the last several days, it was this combination of strong demand out of China on the one hand, and the other primary major supplier in the world for corn exports, that being Brazil, having production problems, reports coming out of the field that they're getting chopped back, tangible percentages in terms of their expected crop size. So on a weekly basis. So it's an important thing. We've seen pictures from there, dry conditions, parts of it through some satellite imagery that we have available now that focuses on agricultural applications. It's a NASA GRACE. It's out of UNL. Good, great information. Gosh, you can see extremely dry areas there, and there were problems in Argentina, another major exporter as well. I also see that although we're making statements out of that Ukraine, which is right now basically the number 3 corn exporter, or there's the U.S. and then these other 3 between Brazil, Argentina, and Ukraine, that you have, they are stating that they're in tremendous shape. But when I look at the moisture map, they're as bone dry as anybody. So you have to wonder about these issues, and we're just talking today about the feed grain side. There are great concerns about what can happen in the soybean side. Although the soybean crop, South America, on its way to being a good chunk harvested. So it's not quite as urgent given that we're not in the heart of the growing season for soybeans down there as we are for corn. So we have a combination weather market, and it's not our weather, it's South American weather, and a demand pull market, and then with all that's coming into play in China. I would say one other thing before we get into specifics for Kansas. When you look at that China map, you see that the heart of the country, moisture, excessive moisture everywhere. But then you see that North China Plain, some of those areas that are their production areas dry. And I guess it's a lesson for us in the grain markets that each year we're just a few weather fronts away in these major production areas from having something that we didn't anticipate. And when we go several years without that happening, we underestimate the variability and volatility in the market, the riskiness of it. And so here are several years since that 2012 drought, hadn't had any big problems, thinking, well, gosh, it'll come. It always has here of late. And you know what? So we're looking at prices now that's certainly rival what we had in that last major drought, and even back in 2007, 2008. So amazing times. I guess I would say that since we're focusing on the feed grains, I think you have to go back and look at these usage industries and see what these high prices have done to them, and are they causing cutbacks and in terms of corn use, and really for us in Kansas, what are we shifting over to if we can't get hold of corn? That's the question.
And when you look at that domestic demand bucket, to put it that way, Dan, particularly the ethanol trade, there's a sliver of, you say, profitability starting to show in that particular enterprise. And that bodes well, obviously, for the corn and sorghum trades.
Yes, when we get talking with people in the media and other people in industry, they ask, well, when's rationing going to happen? Well, it's no doubt happening in some of these, but the key of whether we have rationing or not, it has to do with whether the product prices, the livestock being fed, the ethanol being sold domestically, and the demand pull from overseas. Does the product demand drive the price of what's being sold up to match? Well, it seems in the last month for ethanol that if you look on a weekly basis, we've seen we've seen corn prices climb for sure. In Iowa, started about 550 or so at the beginning of April, up to about 615 now. And you think with that, gosh, the ethanol plants, how can they possibly make money? But at the same time, you've also seen, and particularly in the last 2-3 weeks, the price of ethanol jumped 20 cents from the let's see, it would have been the 16th of April up to Friday the 16th, up to 215 per gallon, and that with DDGs holding steady. They've dropped off some in terms of selling prices from where they were, but at least holding steady. That for the month on average, it shows you put all those weeks together, those 4 weeks together. Well, it looks like we're losing about 7 cents a gallon, which, by the way, is better than 10 to 20 we'd been losing for months and months. But you look at the last week, the week of the 23rd, with $2.15 ethanol in that part of the country, even with $6.15 corn, they're showing that they're making profits by a couple cents per gallon. So interesting. So that means that the selling price of $2.15 for ethanol, that their cost of production is about $2.13. So that's not a cheap cost of production, but that's also not a cheap ethanol price either.
Yeah. You say, though, that we are seeing here in Kansas demand for corn for ethanol output, not necessarily for grain sorghum, though. And that's being reflected in local basis here and there.
Well, yes. One thing that I've been watching is that, for the whole marketing year, anybody growing grain sorghum in Kansas pretty optimistic about the export side, and we've had pretty good exports. But here of late, in the last bit of time, you've seen some moderation in that export demand pull. It's interesting to me that moderation has happened at the same time when about two weeks ago we had 33 million bushel of grain sorghum exported, which is, I don't know if we can say it's a record, but most of the time we're trying to get 2, 3, 4, 5, and a good week is 10. Well, we had 33. So what a week. Followed that up the next week with 10, and since then I've got back down to that 4 or 5 area, sometimes lower. So the average pace we need to get to the end of the year is about 4.5 to 5, as I recall by my own calculations. But anyway, so after that run up, the first thought was, well, we're going tremendous. This is a start. But then immediately after that, almost in lockstep, then the ethanol basis around the state started to really suffer, and by not just a few cents per gallon. As I look at the charts we pulled together here out of Ag Manager and some information we've got in a special report online there, it looks like in parts of western Kansas, we've seen about a dollar weaker basis for grain sorghum. Central Kansas went from about $1.50 down, $1.50 over to about 20 under, so even wider. So it's interesting that it seems like the areas where we had the most decline were they were the export oriented ones. Not quite as much decline, relatively speaking, in the western third of the state, where we could still feed livestock. And really the star of the state is down there in the southeast corner. Looking at, we try to follow bids out of Columbus, and basis bids there have hardly weakened at all in the midst of all this. So when I think of southeast Kansas, what's unique about southeast Kansas? Well, has a lot to do with livestock feeding going down into Arkansas and those other states. It's a lot more of the, I guess, logistical opportunity to move to those feeding areas and in there than any place else in the state. So that'd be my first thought of what could be going on. Also, you're not far in southeast Kansas from the Port of Catoosa down in Oklahoma, but I don't know that if we're seeing weakness in central Kansas, that where the exports would really be the pull for sorghum, I don't know that you'd see something unique happening in southeast. That's just my own thought.
And to complete that story, probably ought to look as well at the local comparisons of, let's say, corn now to soybeans and to wheat. Several dynamics in play there too, of course.
Well, that's right. Would say, just want to mention before, as we mentioned, grain sorghum basis, before we get to that direct comparison that you're talking about, corn basis actually has, well, it has been level to stronger here, not tremendously stronger, but by a few cents, held up well in every part of the state except in Topeka, where it only fell off by a couple cents. So corn basis held up really well, and in so many words, the corn price has held up. The sorghum price has, on a basis level, has weakened a little bit. So basically, sorghum has come back down to corn. And so, as you mentioned earlier, coming back to this, if that's the case, then for me, I kind of look to see when we start to see a basis bid, a grain sorghum bid at the ethanol plants. And so far, we haven't been seeing, at least with what's publicly reported. But if corn continues to go strong and great guns, and if we see just so sorghum exports, then along with what looks like the likelihood of feeding a fair amount of wheat, we could see sorghum start to come in too, and still be a tremendous price, $6 and some per bushel. But I think these high prices have that's what's happened. It's pushed us into a set of dynamic, hardball comparisons on what crops we can use to still accomplish whatever we're trying to get done. If you're a livestock feeder or exporter, sending the livestock feeders to users overseas, or even ethanol people probably considering what to do. These high corn prices have forced us to consider a number of other alternatives that outside of the normal realm of what we feel comfortable doing.
So as we round out this segment, and then you'll rejoin us tomorrow, corn and grain sorghum producers, once more, you see these day by day shifts in the market, some volatile, some a little more tranquil, shall we say. Knowing how to maximize what's going on out there as a producer from a marketing standpoint, well, it's hard to point to one or two or three definitive recommendations here, isn't it, Dan?
Well, yes, and I know where you're going with that question. One thing I want to add back in on that is that where do we go as a user until we get the next crop? Where do we go? Well, then the first crop on the docket, and that'll be available, will be the wheat crop. That's coming in July. We're still waiting for fall to get hold of anything on the feed grain side. So what will we be doing? I think if you're a wheat producer, you'll be looking really strongly at what local cash bids there might be, and it might be the feedlots that are bidding that you're talking to, as opposed to the regular folks that you're going to, or the people that normally buy are talking to the feedlots. That'd be the elevators. So that's something to look for. This is it's an amazing time. You can build scenarios in your mind as to how we could use ag options in a volatile time to position ourselves to take advantage of this. The challenge right now is that there's so much volatility that the price of all those options are so heightened, because they're reflecting all this uncertainty that gosh, the time to have done all this on the options was to have been a complete contrarian and bought a bunch of cheap things for about 5 cents back in January, February. But then if we're going to so now I think the thing, if we're buying puts to protect the downside, we're probably looking at something out of the money, tangibly below where futures are at. If D's corn closed yesterday at 546.5, then do we look at $5? Do we look at 480? And this is 480, not 380. 480 is, oh gosh, it's 70% below where the futures, 70 cents below. But historically, I think maybe the last thing I'll say before I get all fired up on this, Eric, is that so much depends on our point of reference. If our point of reference is cost of production and a profitability goal of 5-10%, something like that, then we can hit our point of reference. If our point of reference is the high we just had in the market, we're going to be torturing ourselves for a good long time because that's such a moving target. So I guess I'd encourage people to think in terms of financial performance oriented points of reference and goals on the marketing, rather than just what just happened, in terms of the high we just hit. And if we take that view, there seem to be some great opportunities out there for us to tie in 5-10% profits, things like that. And so I guess I'd encourage us to take that financial view more so than just the pragmatic point of trade, what happened yesterday view of how I can top the market.
Very well. Well, we purposely did not address the soybean nor the wheat markets, Dan, because that's on tomorrow's plate, as we'll dig more into these markets, what's going on and what producers need to be attuned to fully. So until we visit this same time tomorrow, many thanks.
Thanks, Eric. Take care.
Once again, he is a grain market economist, K-State Research and Extension, based in Northwest Kansas. That's Dan O'Brien with us, and he will be along our way once again for a look at those bean and wheat markets tomorrow here on Agriculture Today.